Wednesday on Wealth. I'm Priyanka Charuvar, a qualified chartered accountant. Our today's topic is taxation of gifts under Income Tax Act. हम सबको पता है कि इंडिया में हम फैमिलीज एंड रिलेटिव्स को कितना इम्पोर्टेंस देते हैं और हमारा जो डाइवर्सिफाइड कल्चर एंड कस्टम है तो उसकी वजह से हमको बहुत सारे ओकेशंस ऐसे मिलते हैं जहाँ पे हम सेलिब्रेशंस करते हैं और गिफ्ट्स एक्सचेंज करते हैं। हम सबको पता है कि हम इंडिया में रिलेशंस और फैमिलीज़ को कितना इम्पोर्टेंस देते हैं। हमारे पास बहुत सारे ओकेशंस ऐसे आते हैं जहाँ पे हम लोग फैमिलीज़ को गिफ्ट करते हैं। Many a times people use gifting as a source of tax planning or tax evasion. What we need to understand is tax planning done within the scope of Income Tax Act is safe, but tax evasion can create a difficulty for us. It is highly important to have a basic understanding of taxation on gifts in India to avoid any ignorant or unplanned tax outflow. Gifts received by any person is taxable under the head income from other sources and it is taxed at the normal tax rate. So let us understand the definition of gift for the purpose of Income Tax Act. It is divided into three parts. The first one, money received in cash or check. The second, immovable property in the form of land or building. And the third, movable property in the form of jewelry, drawings, etc. Now let's get into the taxation of these. The first one, money received without consideration. So in case we receive any money which is less than 50,000 without consideration, then it won't be taxable. And in case it exceeds 50,000 rupees, then the entire amount will be taxable. Then the second case is where immovable property is received. In this, there can be two situations. The first one, the immovable property is received without consideration. In case the immovable property is received without consideration and the stamp duty value of the property is above 50,000 rupees, then the entire value of the immovable property will be taxable. The second situation is where the immovable property is received for an inadequate consideration. So in this case, what we are supposed to do is that we need to compare the stamp duty value and the consideration. So in case the difference is more than 50,000 rupees, then the difference is taxable. So let's understand this with the help of an example. So in example 1, if we say that the stamp duty value is rupees 2 lakhs and we have paid a consideration of 75,000, then in this case 1,25,000 will be taxable as the difference exceeds rupees 50,000. Example 2. So in example 1, if the consideration is 1,60,000, then there will be no tax as the difference between the stamp duty value and the consideration is less than 50,000 rupees. Now the third case is where movable property is received. So the first situation is that we receive the movable property without consideration. So in case the fair market value of the movable property is more than 50,000 rupees, then the entire value is taxable. The second case is where we receive movable property for inadequate consideration. So in case the difference between the fair market value and the consideration is more than 50,000 rupees, then this difference will be taxable. Now let us discuss some exempt gift. These are cases in which if any gift is received in the following situations or from the following persons, then it is not taxable under the Income Tax Act. So let's discuss one by one. The first one is if any gift is received from any relative. So here it is important to understand the definition of relative as per the Income Tax Act. So relative means the spouse of the individual, the brother or sister of the individual, the brother or sister of the spouse of the individual, the brother and sister of the parents of the individual, then any linear ascendant or descendant of the individual, or any linear ascendant or descendant of the parents of the individual, and spouse of all the persons as mentioned above. So here we also need to understand the meaning of linear ascendant or descendant. So linear ascendant means the parents, grandparents and so on, and linear descendant means children, grandchildren and so on. The second case is on the occasion of marriage. So in case you receive anything on the occasion of your marriage, then nothing will be taxable. Next, under any will or by way of inheritance. Next, by way of a local authority. Next, by or from any fund or foundation or medical or educational institution, hospitals, etc. From or by any trust or institution established under section 12A or 12AA. From any individual by a trust established for the benefit of the relative of the individual. The next is any compensation or payment received by an employee from his employer due to the termination of his employment or modification in the terms of his employment. We receive gift voucher or cash of up to rupees 5,000 from our employer. So in case the amount is up to 5,000, it won't be taxable. And if it exceeds rupees 5,000, then the entire amount will be taxable. So before winding up today's session, I would like to discuss an important point. Due to excessive tax planning using gifts usually fall under the scrutiny of the income tax department, and most importantly if the amount is huge. So it is always advisable to maintain proper documentation, and also it is important to note that there should be sufficient funds available with the donor to justify the same. For further queries, you can get in touch with our tax and finance expert. For more such videos, please subscribe to our channel. Thank you.